We welcome the Honourable Australian Treasurer Wayne Swan, joins us live from Canberra. Mr. Swan, thank you so much for sharing your time this morning. Let me first get your take on the markets, jittery times, panic that we saw yesterday. Did you feel concerned at all about the big drops?
Well, there's been uncertainty and volatility on markets, and Australia is not immune with what happens in international markets, but the economic fundamentals here are rock solid. We've got strong public finances, low public debt, a huge pipeline of investment in the country, particularly in resources. We've got low unemployment. We've got some of the strongest banks in the world. We've got a great AAA credit rating. All of these indicate that the fundamentals in the Australian economy are strong. We're not immune from developments in international markets, but if you wanted to be anywhere in the world, be in Australia.
That's right, you still have the AAA rating. Now, Treasurer, we heard from the Federal Reserve, which really boosted markets on Wall Street, saying they will keep interest rates exceptionally low, basically close to zero, through to at least mid-2013. What does that mean for Australia, and what sort of monetary policy response would be needed?
Well, I think it's a welcome development for the global economy. Any measure that can be taken in the United States to restore growth is very important. They've still got a painful process of adjustment ahead in terms of fiscal policy, but everybody in the global economy has got an interest in the United States economy growing. So I certainly welcome those initiatives from the Fed today. What it means for here, I don't speculate, for example, about what the Independent Reserve Bank does here in terms of monetary policy. I just make the observation that here we have a capacity for a great deal of policy flexibility should it be required.
Now, I ask about policy response because, of course, with more monetary easing stimulus in the U.S., that means money flowing to other parts of the world, including into Australia, in the form of the Australian dollar. Do you think there'll have to be some treasurer move in response?
No, look, I don't speculate about those matters. Australia's economic fundamentals are rock solid. We are seen to be a very attractive place to invest, and international investors are investing in Australia right now. They see the Australian economy as being strong. They look at our fundamentals, and they're continuing to invest here, as indeed they are investing in the region, because the region itself is strong as well.
Okay, well, Treasurer, let's talk about the Australian dollar, because the Aus dollar actually came off its record highs, breaking through parity during yesterday's session. And in fact, just in recent weeks, we saw a post-float high of over $1.10. Let me ask you, with risk being put back on to the markets right now, what currency levels would you be comfortable with?
Well, I don't speculate about currency levels. What I can say about the Australian dollar is that its strength reflects the strength of the Australian economy relative to other developed economies, reflects the fact that commodity prices are high. So the Australian dollar has been stronger for some time, but I don't speculate about the future pathway of the dollar. I just never do that. I won't do it today.
Okay, well, Treasurer, you know, with the strong Australian dollar, some say that has impacted the Australian economy, because you take a look at some weakness. We're looking at consumer spending down, housing weak. You're saying that the Australian dollar doesn't concern you if it hits 110 or so?
Well, as I said, I'm not buying into a discussion about where it may go. The fact is the economic fundamentals here are strong. Of course, when the dollar is strong, it does impact upon certain sectors within the economy. That's why when we look at our economy, we do know there's some parts that are not growing as fast as others, and certainly a number of sectors are hit when the dollar is higher. Our tourist industry, for example, is hit. Many of our export industries in terms of educational services and so on are hit. But the fact is that overall, the economy is strong, and the dollar tends to reflect the strength underlying our economy.
Okay, Treasurer, let's talk about the strength of the Australian economy, because we have the IMF saying that the RBA needs to raise interest rates to rein in inflation, but some economists are saying that the Australian economy is not strong enough to withstand another interest rate hike. Do you want to see a hike, or do you want to see a cut from the RBA?
Well, I'll tell you what I'd like to see, and that was the IMF report, because it just pointed to how well the Australian economy has been run in recent years, and they gave the Australian economy a very big tick. They didn't necessarily say anything about what the Reserve Bank should be doing with monetary policy. They talked about the possible growth that we will have in the next few years. They have a very optimistic outlook for growth, and they talked about possible stances in monetary and fiscal policy in that report. But once again, it just pointed to the strength of the Australian economy when it goes to low unemployment, when it goes to our strong public finances, when it goes to the investment pipeline, when it goes to our strong financial institutions. They pointed to all of those things and gave us perhaps one of the best reports that any developed economy could have from an IMF Article 4 review.
Well, Treasurer, you know, we have the RBA reeling back its economic forecast for next year quite dramatically by over 1%. Do you think the economy right now is still strong enough to withstand this introduction of a controversial resources tax?
Well, there's a couple of points there. I think the IMF made the point that we should be putting in place a price on carbon. That's what we intend to do from the 1st of July next year. It was supported by the IMF. It's a fundamental long-term reform of our economy, just like the long-term reforms that we've put in place over the last 20 years have ensured that our economy remains strong. We want to continue to be ahead of the curve by putting a price on carbon. And that got another big tick from the IMF.
Okay, well, we're talking about the resources tax, Treasurer, because you heard about a lot of these corporate mining bosses saying that if you tax basically miners in Australia, you're giving the advantage to foreign players in this market. And what about the economy itself? Is it strong enough?
Well, I think you'll find that the IMF has also supported resource rent taxation. It's the right course of action for Australia. We're optimistic that that will be through the Parliament later in the year. There is continuing to be a massive pipeline of investment into resources in Australia, in full knowledge that the government is putting in place a resource rent tax and a price on carbon, because those international companies understand that these policy tools are essential for the strength of the Australian economy in the long term. They're continuing to invest in coal and in iron ore across the resources sector, and that's a good thing for our economy, and they recognise that the economy is well run.
Now, Treasurer, I want to talk to you quickly about your pledge to bring the nation's budget back into surplus. Given the global market turmoil, are you still on track?
Well, there's no doubt that what's occurred in global markets makes it much harder. It will certainly impact on markets here. It will impact on taxation revenue, but we absolutely intend to return our budget to surplus in 2012-13 given these difficult conditions.
One more question for you, Mr. Swan. Some say with what's happening globally at this point, maybe this drive for surplus should be put on the back burner and the focus should be on actually putting more stimulus into the Australian economy. What's your thinking on this?
Well, my thinking is that our current stance on policy is appropriate for where we are now. Of course, we'll have to observe events as they unfold elsewhere in the globe, but for all of the reasons we've talked about today, we expect the Australian economy to continue to grow, but we'll have to actually observe these events as they come through. But at the moment, we're very satisfied with our current policy settings.
Okay. I promise this is the last question, Treasurer. Have you planned for a double dip in Europe or the U.S.?
Well, I think there's a period of long and painful adjustment going on in both Europe and in the United States. I certainly hope that through cooperation, through G20 economies, we can get some better coordination as we go forward to restore global growth. That's important for all countries. It's important for the Asia Pacific, and it's important for the Australian economy. So I think we've got to make sure that the international policymakers put in place domestically as well as internationally a set of policies which promote global growth. And that's what I'll be working to achieve through the G20.
All right. Thank you so much for your time and your patience this morning. Treasurer Wayne Swan joining us live from Canberra this morning.